There is little difference between assets and liabilities of English language. Assets are things that put money in your pocket. Liabilities are things that deplete your bank account. It goes without saying that you want to amass as many assets as possible while incurring a few liabilities as possible. I'll show you how to boost your asset holdings while decreasing your obligation risk. Hello everyone, welcome to Wealthy Wisdom. In this video, we're going to talk about assets and liabilities of English language. If you're new to this channel, do like and subscribe to the channel. Assets and liabilities should not be mixed. An asset is defined in financial accounting in a reasonably easy way. Anything that may be utilized to produce value, by which I plainly mean money, is seen as valuable. However, many people often confuse the two. Here's an excellent example. Is a house a valuable asset? Some people assume that buying a property is an asset, but unless you plan to sell it, it is a significant responsibility. It will drain your funds for years to come due to the mortgage and the continuing maintenance fees you will pay on a monthly basis. In my opinion, it's not money in your pocket. On the other hand, if you plan to sell the home for a higher price, it may be considered an asset. When you pay to acquire assets, they are sometimes referred to as investments. Why? Given that an investment is anything that provides a measurable return on an initial investment. Purchasing stocks, shares or bonds, for example, qualifies as an asset purchase since you may sell them for a profit via capital gains or dividends respectively. We'll explain it later. Is a car an asset? When you decide to buy a car, the price reduces dramatically. It would be absurd to consider second-hand cars as assets since they are valued significantly less than new ones. Many people still believe that since you may later sell the car, you may consider it an asset in this respect. A good asset, in my view, must also be lucrative. An automobile, for example, is not an asset since its value depreciates fast. You will not be profitable whether you sell it 2 hours or 2 years later, since you will not be able to sell it for more money. Of course, there are certain exceptions. Vintage or unusual cars may appreciate in value. We're not talking about such unusual occurrences. We're talking about the kind of car that most people buy, a daily driver for personal usage. That's the difference between assets and liabilities of English language. What distinguishes tangible from intangible assets? This one is really straightforward. Because physical commodities are actual, tangible objects, you can touch and interact with them. Real estate, house furniture, financial inventories, and so on are some examples. Intangible assets cannot be physically touched since they are not physical. Examples include brands, patents, copyrights, and other goods, as well as financial and physical assets. Real financial and material assets are often confused and misunderstood. Real, financial, and physical assets are sometimes bundled together as if they are the same thing and generate the same amount of profit, but this is not the case. To put it simply, real assets are valuable. Their intrinsic value shows an asset's inherent worth irrespective of market pressures, which is why they are known as real assets. Because financial assets are evaluated based on market trading values, it is possible to overpay for anything, which is negative because you will lose money. This is another reason why experts like Warren Buffett often discuss calculating a company's intrinsic value in order to assess if a stock is being sold for more than it is worth. If the market price is less than the underlying value, you will almost surely profit later when the market price approaches or exceeds the intrinsic value. Contractual claims, on the other hand, determine the value of financial assets. For a minute, consider stocks and bonds. In a minute, I'll explain why they're called physical assets. It is easier to convert financial assets into cash. Commodities and real estate are more difficult to monetize. The mother of all assets is stocks. If you don't understand how they work, I'll explain it to you in such a simple way that you'll grasp them by the end of this video. A stock is the most well-known asset, and it has enormous potential for investors who learn how to utilize it. Stocks, sometimes known as shares, represent a percentage of a company. In essence, when you buy a share, you're buying a very little percentage of the company. Consider having a house and being able to buy a single brick. You have a right to that brick since you own it and are a member of the household. You may wonder why you would want to own a brick. To begin, I'd want you to understand that when you buy stock, you effectively become a part owner of the company. If you acquire enough shares, which amounts to a bigger ownership interest, you may also be allowed to vote when a major business decision is being made. If you like this video, don't forget to like and subscribe to the channel. Let's continue to discuss the difference between assets and liabilities of English language. In two ways, stocks may be profitable. There are essentially two methods for profiting from stocks. The first and most common is capital gain. This means that you buy a stock, wait for its value to rise, and then sell it. For example, you may purchase a stock for $4 and then sell it for $6. Everything would be okay if you made a $2 profit. Prices may rise or fall in response to market supply and demand. The greater the price of a stock, the larger its demand. If you anticipate that the stock will be in more demand in the future, you should buy it since its value will rise, enabling you to sell it at a higher price. However, you should proceed with care if your estimates prove to be incorrect and the price falls rather than increases. There will be a financial loss. Many people perceive this as a danger, but if you know what you're doing and thoroughly evaluate the firms you buy, you should come out ahead most of the time. Dividends, which are paid out yearly, semi-annually, or quarterly, are the second way to benefit from stocks. Dividends are the equivalent of your stock in that firm. Returning to that brick example, if you buy one brick out of 100, you will get 1% of the house's earnings. So far, everything makes sense. How can I go about purchasing stocks? The easiest way to do this is to open an account with an online stockbroker for investing. Your bank is likely to offer these services as well, so you may be able to invest traditionally there as well. Because fees are involved in both circumstances, every transaction is monitored and taxed. It is significantly more difficult to buy directly from the firm, but it is possible. Both time and money are required. Real estate is sometimes treated as a distinct asset. I say under some cases because, as I previously said, purchasing a property to live in for the rest of one's life with no intention of selling, although some real estate speculators acquire underpriced property with the idea of renting or selling it later, it is a cost, not an asset. In theory, this one should be simple, but in practice, things are a little more complicated. As a real estate professional, you start each day by looking for interesting deals on underpriced properties. What do you mean by underpriced? It implies that you're looking for something that has been mismanaged for a long time, yet has a lot of potential. As a consequence, the price is reasonable, even it may need some repairs. You're planning to fix those issues and resell the property for greater money. I mean, making any renovations to the property that might boost its worth, such as upgrading, painting, or furnishing. Several factors determine the cost of a home. It's not only a managerial issue. Time, location, economic indicators, and interest rates are just a few examples. You might also fix up the house and rent it out instead of selling it. This will ensure a monthly inflow of extra cash. In reality, there are several types of property, such as residential, commercial, industrial, rural land, and special use. However, you most likely lack the money, certainty, and knowledge required to buy, rent, or sell property. Most likely, you have no idea where to look. Does this mean you can start buying these kinds of assets? To begin, you can always learn the fundamental skills. Another option is to employ REITs to purchase real estate investment trusts. You wouldn't have to be an expert. All you'd have to do is trust a business to invest your money in real estate and return it to you in the form of dividend. Many argue that they are ideal investments because they provide high dividend yields and long-term appreciations, which means that prices grow and you may avoid inflation. Is knowledge seen as an asset? In reality, knowledge is a non-tangible asset. Its asset status may be stated rather simply. Assume that you are the proprietor of a marketing company. What you do is simple. You can help businesses obtain more clients by using internet marketing. Everything is up to you, including marketing strategies, approaches, and wording. You must delegate, since as the founder of this thriving business, you cannot do everything alone. The first step is to hire an accountant and a financial advisor to manage that side of the company. Then you start hiring content creators. They are necessary in order to create marketing materials. Then, in order to bring in even more clients, you must hire excellent salespeople. They must receive leads and convert them into clients. You will make more money if you hire better salespeople. Can you see where there is going? If you invest in hiring intelligent people with a talent for selling, you will have a valuable asset. It simply becomes something you will employ to boost your revenue. Also, the return on investment is undeniably measurable. You can easily figure out how much you spend each month or how much commission each salesperson gets. And the amount of money they make shows how valuable their skills are. What does this imply for you? Because your company seldom has to hire new workers, here's the deal. If you learn a helpful skill that you know entrepreneurs need to grow their enterprises, you can wind up being an asset. Learning is crucial, and the more informed you get, the more you will be compensated. We've reached the end of another video, and thank you for watching. I hope you have learned the difference between assets and liabilities of English language. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.